tokenized gold is not just a new form of gold or better gold, whatever people want to call it. It's a potential catalyst, to this gentleman's point, for the collapse of the entire paper gold system.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for December 8th through December 15th, 2025, while supplies last. First this week, 10-ounce silver Nordic Mint bars are just $3.49 over spot per ounce. 40% silver Kennedy half dollars are $1.85 below spot per ounce. 100 gram silver Valcambi combi bars are just $275 per bar out the door. And 1 ounce US Gold Eagles are just $145 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. I'm always delighted, as I am today, to introduce this returning guest for our weekly market update. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Monday, December 8th, 2025. Andy, thank you for joining us here again on Liberty and Finance.
Good to be here, my man. It's hard to believe that the year is winding down already in December. You know, that analogy my father has, life is like a roll of toilet paper, becomes true. When you're young, you don't notice it spinning. And the older you get, it just seems to spin faster and faster and faster. And another year gone by, but it's good to be here with you. Lots to talk about this week, Duncan. It seems like everything seems to be converging here, but it's good to be here and chat with you. Thanks for having me.
Well, I have to then, if you're going to bring up that metaphor again, I'm going to have to say, remember to be prepared, have a spare roll.
Yeah.
Okay.
Isn't that the truth?
All right, Andy, we wanted to talk to you about several topics because this has been a very eventful week in the financial, monetary, economic world. And also, we have a special question that was submitted by a viewer. We're going to get to that in just a few moments. First of all, I want to unleash you on your latest research for the benefit of myself and our viewers and subscribers of what you're watching closely at this time as we wrap up 2025.
Sure. Well, I mean, why don't we start with that question? Because that's one of the things I was going to talk about anyway. So why don't you bring up that question, and then we'll go back and look at some other things that are happening.
We have a longtime viewer who has been very generous also at submitting questions when we have live streams and that sort of thing. This is Bill M. from Florida, and he asks an intriguing question about the adoption of blockchain technology married with physical precious metals. We keep hearing more and more about gold on the blockchain, and it's he asks, wouldn't this be a catalyst to shine a bright light of truth onto what has been shady and where we've heard tales from the Gold Anti-Search Action Committee, GATA.org, and others for years and years about rehypothecation, overselling of promissory notes. Some people say that the ounces on the COMEX are or the LBMA are overcommitted. Some say 10 to 1, 100 to 1, 300 to 1, and that wouldn't bringing some truth to that through this blockchain technology force there to be a one-to-one relationship between the commitments, and wouldn't that essentially drive a scramble for physical gold to honor and fulfill all those commitments that could be a huge catalyst for upward price action because of demand for the physical? Your thoughts on that whole topic?
Yeah, it's a really good question. And before recently, I don't know that I would have agreed with it. Because I really hadn't researched it much. But I've been approached by a couple of very big names in the industry recently to perhaps be very front and center in new programs that they are launching, which I will have the pleasure of talking to you about soon, Dunnigan. But until we get to that point, I've really kind of dug into this a little bit recently. And the gold market globally operates on a fractional levered system, and we're seeing some of that start to crack right now with the amount of deliveries. And that system basically operates where a small amount of physical metal backs large volume in paper claims. That's the rehypothecation that you speak about. In other words, each ounce is sold over and over and over and over again because no one ever stood for delivery. And that's why it's worked for decades, because few ever did. In fact, when you and I started talking about the others in 2020, the group on the COMEX said was standing for delivery, that was the central thesis of everything I was saying. You're like, this is so weird, Dunnigan, because all of a sudden, it went from 0 to 100, where no one was standing for delivery. Now you got this big group standing for delivery. But now you have central banks repatriating gold. Remember all the banks that we talked about, the German Bundesbank, the Dutch National Bank, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank. They all repatriated their gold from the Bank of England and the New York Fed. It's about trust. And investors now are shifting, as you mentioned, to this tokenized gold. And the more I dig into the offers or to the possible opportunities that have been presented to me, the more I begin to think, yeah, this may actually have a profound effect because it gives fully allocated and instantly transferable and fungible ownership of the real metal. Not only does this undermine demand for paper gold, which has, I think, been exposed by much of the world. They see the rehypothecation. They see the Achilles heel of the system is standing for delivery. It also gives very intriguing options for collateralization of your metal that many of us who have, a large portion of your assets in gold and silver come to a point where you want to buy a home or you want to do something, you need collateral. And the banks, how do I know you got metal in your closet and blah, blah, blah. You can't use it. This does. But what I could see happening actually because of this transparency and because of this instant validation and transferability and collateralization, I think you could see a lot of investors exit the paper system for allocated tokenized gold, at which point the system could face that sudden collapse triggered by unorderly unraveling of unhedged, rehypothecated exposure. And I think the bottom line is that tokenized gold is not just a new form of gold or better gold, whatever people want to call it. It's a potential catalyst, to this gentleman's point, for the collapse of the entire paper gold system. I agree with him because paper promises that have been exposed for being BS, I think this is the antidote for it. And if done properly, could rewrite the entire ecosystem, if you will. I think it's very intuitive question, and I am inclined to believe it.
I'll play devil's advocate for a moment and just poke the bear a little bit farther. If we got this far with a scandalously corrupt and misleading turning of a blind eye by regulators to over-concentrated positions on the COMEX, changing of rules ad hoc by the club, the COMEX or the LBMA, to favor their in club, as George Carlin says, and you're not in that club, and on that led to this rehypothecation. What is there to say that saying, oh, now we've got this new and improved blockchain technology couldn't be just as infected by that corruption of saying, yeah, there's all these separate people that think they have a blockchain claim to gold, but it's been rehypothecated underneath that. Just like when we formed the United States and we had the lovely Constitution, which is probably the second most significant document, I would say, after Holy Scriptures ever created in the history of the world, and yet. Look at us now. Are we living a constitutional, or under the Constitution, or is it in appearance and it's just a big stage show and really behind the scenes the deep state marches on unhindered?
Fair point. They've been pretty successful at hoodwinking us all, but that's why I said if done right. To me, when speaking to the folks about this that I'm in discussions with, I said to him, there are just a very few things that need to make this work. Number one, it has to be transparent. Obviously, that's the whole premise of blockchain. So that's nothing profound. But it has to be transparent in the respect of who's holding the gold. Is it an institution like Brinks or the Royal Canadian Mint or some major mint, the Perth Mint, the U.S. Is it who's holding it? In what form is it held? Who's auditing it? And the key to it all, in what form and how easy is it for me to take delivery? And that's the most important part. In other words, any exchange that doesn't allow delivery or any platform that doesn't allow delivery, it's fugazi. You can throw it right out the window right now because it ain't going to work. The whole premise of the whole reason the LBMA and the COMEX have worked, even though they've rigged the system, is that they allow delivery. Even though no one ever stood for delivery way back when, they do allow it. That is the key. And if you want to really come out the gates screaming, who owns it, who audits it, what form, and how easy and what form can it be delivered? Those are the things that could very quickly tip the scales. And I think when a system loses trust, and I think this has been an overreaching theme that you and I have talked about for a while, this whole country, this whole thing, I mean, it's not just the country, it's everything about it: judicial system, electoral system, immigration system, wokeness instead of meritocracy, all the stuff we talked about ad nauseum for years, especially during the previous administration. And then on top of it, sanctions, well, you call them tariffs, but they're actually sanctions masquerading as tariffs. The way that this administration, and granted, I'm glad he won and I would vote for him again, but there are some things he is doing that is eroding trust, even with our allies, by placing tariffs on Mexico and Canada and the EU. And, there are things. This whole system is about, I think, a fraying of trust. And so if you want to make this work, it has to be completely and totally trustworthy. And that would be being very open and transparent about all of those things, including who's auditing it, how easy it is to see the audits, and if I want to stand for delivery, in what form and how easy is it for me to do that. If those things all became relevant, then yeah, because I think we're reaching a point in time where the COMEX and the LBMA are losing trust globally. And that's why you see everyone standing for delivery the way that they are, because these countries don't want paper promises anymore. I think they want the real thing in their possession, and that's more important than anything else to these players. So, yeah, if done the right way, to your point, which is a valid one, then I think it has legs. It really does.
I'm going to introduce one more, remind our audience of something that you brought in over and over again through the years, and that is that perhaps, and again, from a preparedness standpoint, the old rule is 2 is 1 and 1 is none, meaning if you don't have redundancy built in to your plans, you're setting yourself up for a rude awakening and likelihood that Murphy will get you and you'll end up without a key resource you have. So perhaps a hybrid plan will still be necessary for people, because as we've seen even recently, when there was an extreme pressure on the COMEX and suddenly they had a cooling outage and they the COMEX couldn't function, only for silver for 11 hours and that kind of thing. So as our lives are getting more and more complex, more and more technologically dependent and technically complex, we've spoken with retired NASA engineer talking about EMP risks. We've talked with Steve St. Angelo of the SRS Rocco report, talking about the fragility of overly complex societies throughout history, from the beginning of time, long overly complex supply chains and building the Tower of Babel, metaphorically, how that eventually sets everyone up for brittleness. And we saw that during COVID with the supply chain shutdowns. My wife and I just last month went out of the port of Long Beach, California, and it was staggering, the scope and scale of that place. If you ever haven't been to the port of Long Beach, you should just see what it is. The number of trains, the number of trucks, the number of cargo ships, the number of container unloading derricks and everything that they've got will blow your mind. That complex global supply chain system became fragmented. Became our own worst enemies with the complexity of this marvel that we've created. So if we build this wonderful, wonderful system with everything that you mentioned on a technical platform, but what you've said for years is you believe there's some value to being analog in a digital world. So where is there room for a hybrid solution where people have close at hand, in their own possession, something that's absolutely tangible, physical, and available for, intrinsically available for use, versus also relying on this beautiful system that may come into being here, which would allow them ease of transactions without having to have the physicality be a burden across distances and that kind of thing.
Well, I mean, I would rather hold it myself, have some for that ease, but I think this would be an antidote for the COMEX and the LBMA, in the respect that the COMEX and the LBMA are the ones that are losing credibility. The only reason to have it on a blockchain as an investor, I guess, would be for ease and collateralization. If you don't need collateral and you don't care about, the benefits of having that type of platform, I think you're better off holding it at home myself, or burying in the hole in your backyard or whatnot. But, part of running a business, done again, and I think this has maybe been one of my strong points for a long time, or maybe not. I mean, I kind of feel like it has been in my own mind, but that's not even up for debate. All I'm just simply saying is that running a business means if you don't learn to roll with the changes, you get rolled by them. And I think it's pretty well determined now that things are moving to tokenization. I mean, you look at the chairman of the SEC just came out and said all markets will be tokenized very soon. And I think that we are moving in that direction. You can see the stablecoin act, the Genius Act. Things are moving to that platform where it's a system that will be about transparency and about the ability to collateralize and to use things that are tokenized. Do I like it? No. I would rather be back even before cell phones, and we had to go to a payphone to call your girlfriend or whatever. It's like, I would just say to you that doesn't matter. The toothpaste is out of the tube, and either you roll with the changes or you get rolled over by them and you become an afterthought. So I think it is happening. To me, the best place for it, if the world wanted to challenge the West, the way to do it is to develop a system like this, where there is transparency, deliverability, and low friction. These things are happening, and whether the West does it first or not, I just think it doesn't matter. It's moving in that direction. Now, as far as the average person, I guess there are benefits to having it tokenized as well, if you can stand for delivery. Otherwise, everything is just, again, up in the cloud. So there is the middle ground there. The middle ground is you have your physical position at home or wherever you store it, and then you have something tokenized to give you collateralization potential or the ability to access it much more easily. So that to me is about as middle ground as you get.
You made me crack up right at the end there when it reminded me of when we were homeschooling all of our 5 kids, and for the first time ever, and this is going to be only the old folks here are going to realize how anachronistic this is my daughter came to me and said, "Dad, I would turn in my report that I wrote up, but I lost it on the internet." Now that cracked me up at the time because nobody had ever said those words to me in my entire life before, but
the dog ate it.
So AI ate my homework, or AI ate my collateral. Now you alluded there to the importance of, and what you've been forecasting for years for us is the BRICS plus nations coming up with gold-backed unit. That story came out this week, and your reply, which was absolutely correct, is how long have I been talking about this? You want to hit us with that realization of exactly what you're talking about. That's the way the world is going.
Yeah, sometimes I ask myself, because, well, it's true. I ask myself, is it wise to say these things that I believe that kind of go dark, and people say, he's a blowhard, he talks. But it's nice. I mean, I started talking about this unit well over a year ago, maybe 2, I don't remember, but talked a lot to you about it and all the shows that I did about it, because it's not as prevalent in everything I talk about these days, but for good 2-3 years, it was. I remember 2019, 2020, and I kept talking about the unit and the Belt Road and all this stuff. My wife said, you never stop talking about this. People are going to get annoyed. I said, but you don't understand. I'm the only one talking about it for the most part. And I see it so clearly. I believe it. I don't care. I'm going to stand out on the limb and say it. And it was cool to be right, to be proven at least the majority of what I said, a lot of it happened, and nothing ever happens the way we think it's going to, but variations of it. But the unit is something that I think is happening. And well, they just rolled out the beta test. But before I cover the unit, what I believe is the rails of the unit is exactly what China is doing to expand the internationalization of the digital yuan. Now, they're saying that not to piss off President Trump. period. And what is that internationalization? It is using the Shanghai Gold Exchange to build a series of multi-jurisdictional vaults throughout the Belt Road Initiative, starting in Hong Kong. What is the reason they chose Hong Kong first instead of Shanghai? Well, Shanghai was the only one. Next one is Hong Kong. Why would they do that? Because if gold comes out of China, it must go through Hong Kong to come out. Okay, cool. So the first trade they did, United Arab Emirates and China, the two of the four initial developers of the M-Bridge technology, which the unit will run across, which is a cross-border payment system that is not compatible with the SWIFT system. So there's no sanctions available there. And it settles in 7 seconds at a 98% reduction in fees. Now, the idea is right now, the way that it's set up before we talk about the unit is that China can buy oil from United Arab Emirates and they will pay for it in digital yuan. As of right now, the UAE could go to the Shanghai Exchange in Hong Kong and stand for delivery. China has made it immediately convertible into gold without having to switch to dollars first. So UAE says, I really like gold for that. So go ahead, give me your yuan. I'll switch it into gold immediately. Boom, done. These rails, these vaults will be built all throughout the Belt Road and Asia, Africa, South America. We already see vaults expanding in Singapore just built a new one, and St. Petersburg just built a new one. And of course, they're building a BRICS platform. And we have all of these vaults in the United Arab Emirates and in Brazil, all around the place that will have gold that are all connected to the same system. Well, this is the rails for the unit, as far as I'm concerned. And the unit would be best described as a settlement unit of account concept. So in other words, it's not a common currency, right? It is a settlement unit of account where it's a basket of 40% gold, deliverable to central banks if they need it or want it, and 60% BRICS plus currencies. And this is the currencies of the BRICS plus nations. They will need to maintain a strong monetary ecosystem. It benefits the countries themselves instead of benefiting the United States. That's number one. And if I want gold, well, I can stand for delivery. It is a wholesale settlement instrument, if you will, for governments and very, very large institutions. It is not a retail platform. That's BRICS Pay. And interestingly enough, BRICS Pay, which is B2B, business to business or business to consumer or bank to bank, small bank to small bank, is like a credit card system where if I live in Brazil and I'm going on a trip to UAE, I can just pay on my BRICS Pay app and bang, it's instantly done instead of having to convert and do all of this stuff. But I listened to an interview by the guy who developed, and he said, we are right now in negotiations in China right now to roll this out to the Belt Road Initiative. That's what they're going to do with the M-Bridge or the unit, where you're opening up to 75% of human population, 150 countries, not just the BRICS nations. And this is the part that the naysayers and the poo-pooers have missed continuously. Sergei Lavrov came out and said, no, we're opening this up to everyone in the world except the UAE, or the United States, the European Union, and Great Britain. They can't use it, but the rest of the world can. And so it is a basket-backed collateral anchored system, token used to settle trade invoices. The key of it that I don't think I talked enough about, but that really makes sense to me, is that the unit will make measures the BRICS plus currencies in gold terms instead of you're measuring gold in currency terms the way it is now, where you measure it in dollars. All of these currencies, their value will be measured against gold. Gold is the reference in all of this. That is the important part to remember, is that gold is the reference in all of this. And in essence, what it's going to be able to do is allow countries to trade with other countries using this settlement vehicle, which allows for immediate delivery in gold. And all of it will challenge the hegemony of the West, because sales or transactions will chip away at the transactional status of the dollar, devaluing it. And ultimately, gold being the anchor to all of this, which has destroyed the performance of the 10-year Treasury without any counterparty risk, will start to massively chip away at the reserve status of the Treasury and of the dollar. So the bottom line here is that it's in beta testing right now. So the claim that it had been launched successfully, it's been launched, but in a beta test. One last point I'd like to make about it. You didn't hear about this until here it is, right? Why? Because the United Arab Emirates, China, Hong Kong, Thailand developed the program. Shortly thereafter, Saudi Arabia wasn't involved in the initial development, but they came on as the fifth, and they're a big one, right? The largest oil producer, OPEC, they came on as the fifth participant in Enbridge. Think about that for a moment. Cross-border settlement for things like oil, and Saudi Arabia is the fifth primary member. Now, all of this, as just for a refresher, people don't know this, was developed in concert with the Bank of International Settlements Innovation Hub. I remember before Michelle McCory worked for me, I was doing an interview with her on Kitco, and she said, well, I said this to Andy, isn't that a Western institution? I said, you know what? You're right. Ding, 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 ding. I don't know why I didn't really think about that. And she's like, couldn't they perhaps have other interests or something? And I'm like, yeah, you're right. Almost immediately after that, the UAE pulled out. The bank, UAE, got too many acronyms going through my head. The BIS pulled out at the 12th hour, right when they were going to make it go live at their meeting in Novigrad. And they said, we can't be involved in any transaction, even though they've been doing this for 4 years, developing it with these people. Well, we can't be involved in any program that would allow any country to sidestep Western sanctions, acting as though they just realized that Russia was the R in BRICS. So that really got the BRICS countries mad, in particular China, very mad. And that's why it's gone dark. You don't hear a lot about it anymore. Now, we knew that they were still working on the bridge technology. And we've talked about it a little bit on your show here, how they have already connected with the countries in Southeast Asia, the Asian countries that are 800 million people, twice the population of the U.S., the largest trading partner of China by far, not the U.S., those countries in Southeast Asia. And now they have the ability to go back and forth with central bank digital currencies, or ultimately the unit, free from Western interference, settle in 7 seconds, no intermediary banks in New York, no sanctions. It's happening. And it's happening now in a much faster way where they're actually testing the unit. Now, they never tested the unit before. It was just cross-border currencies. And I've been consistent with you saying, yeah, this is the rails of the unit. Now, they've gone quiet because what the BIS did at the 12th hour, in my mind, is James Bond espionage. They infiltrated. They said, yeah, we're here to help you. We'll integrate this new system to the West. And then bang, they pull it at the 13th hour, 12th hour. We're out. And they back out. So this is, in essence, because the Chinese pretty much developed it, this is going to continue to progress, but maybe not with the transparency and seeing how it all unfolds in real time as we would like. We just found out that the beta test happened. Okay, here we go. So I guess we'll see in 2026 how that rolls out and continues to develop. But I expect it to be something that really, really, really catches the eye of the West. They're not going to go down easy, but this is something, to definitely not underestimate. And even JP Morgan came out and said, I don't know exactly what they said, but it was pretty much like, yeah, this is actually very legitimate. And it's the most legitimate challenge to the dollar that we've ever seen, more or less, is what they said. So here we go.
This it really does vindicate your intuitive observations and connecting the dots all along the way. You see patterns where others miss them, and you certainly aren't being distracted as the masses are by the mainstream financial press, which will say anything other than that, which is going to lead us to a good understanding of what's coming up next. In fact, you've earned the moniker Andy Schectman, the Time Traveler, among our subscribers. Whenever we do live casts with you, they say, "Oh, Andy Schectman, the Time Traveler is here," and so we have to give you credit where credit is due for having seen things that not everyone has been seeing. I mean, they wanted to bring forward these big principles that you see the landscape changing globally and in our monetary world, back on the scale of the precious metals supply chain from producer to refiner to mints to distributors to retailers. Any updates for our retail investors on the direction you see available supply versus demand, premiums, any special standouts of exceptional? You've always told us that the biggest opportunities sometimes are anomalies that appear in premiums, that kind of thing. Anything that people should be aware of in the trend you see happening right now?
Yeah, I mean, on a bigger picture first, I mean, look, the trend is here. And the thing is, mainstream doesn't notice the trend. And I think maybe even the people who watch this show don't really realize how big the trend is. Over the last 10 years, price of gold has gone from 1,100 to 4,200. That's a 256% increase. And price of silver has moved from 13 to 57. That's a 315% increase. But I think the real trend right now is in deliveries, like we were talking about. Something big is happening on COMEX. I've been screaming that forever, right? And in the December contract, which went off the board 29th, a couple days after maybe the day after Thanksgiving. So far, over 10,000 COMEX silver futures contracts have stood for delivery. 10,000. At 5,000 ounces each, that's more than 50 million ounces of silver that have been taken off the exchange, including 565 contracts or 2.8 million ounces in a single day. So over 60% of the COMEX registered silver was claimed in just the first 4 days of trading in the 2025 December contract. The demand for physical metal is massively accelerating. This is not normal flow. This is institutional accumulation. And I think that this is something that cannot be overlooked. It really can't be. At the same time, you even have Reuters coming out and saying that the London silver tightness or the liquidity crisis is real. And it's happening. And so you're finding cracks within the system as you see massive shortness and demand for delivery. At the same time, you have countries like China and India and Saudi Arabia and Russia that have been accumulating silver, taking possession of silver and gold, reintegrating it into their system. We're seeing China, the second largest producer in the world, as I've said on your show 1,000,000 times, they're going to Mexico and Peru and buying doré and concentrate before it even hits the market by buying this stuff in a pre-refined stage. So they're locking up supply at the source long before it has any chance of reaching the global exchanges. And so I think that this is putting huge stress on the market. Ultimately, will put massive stress on the market. And then you have the U.S. Department of Interior, who adds silver to the 2025 critical minerals list, as we've talked about. And in order to get on that list, by the way, the metal has to be essential to the economy or to national security. Should have a vulnerable supply chain and no easy substitute. So this creates strategic stockpiling demand, and again, and a structural tailwind for demand that's supported by national security and policy. And they should be worried about the supply chain and the geopolitical risk because the United States imports 2/3 of its silver. And, I was reading something the other day that blew my mind. It says AI data centers especially burn through silver. It says every server and power unit uses a little, but tens of thousands of machines lock up thousands of ounces permanently. And powering these centers is even more silver intensive. A 500 megawatt solar farm, enough for one major AI campus, can require up to 300 metric tons of silver or 9 to 10 million ounces. So all of this is happening while the U.S. relies heavily on foreign silver and physical metal is leaving the transparent markets. 75 million ounces have been pulled from COMEX since October, moved to stronger hands. So, yeah, I think that, look, here's another one. 583 million paper ounces traded on Friday. That's 75% of annual global mine supply in one day. And the COMEX had 103 deliveries and the LBMA 553. So, it's getting crazy. In China on Friday, silver closed above $60 an ounce. And so, we keep seeing the price higher in China, which is kind of pulling the price along with it. I just think that things are beginning to really, really, really change. And now you got banks like UBS who are vocal saying that the 300 million ounce physical deficit, and we've been seeing that every year between 1 and 300 million ounces going on the 6th year in a row, is turning them bullish. And they recommend long positions in silver they've never have before. So, yeah, I think when you talk about central banks repatriating gold and all of the stuff we've been talking about, standing for delivery, sovereign wealth funds, commercial banks, huge deliveries, to me, what this boils down to is that it will ultimately trickle down into the retail market. And it hasn't yet, but it will. And when it does, it will happen very quickly. Things will just become very difficult to obtain. It doesn't happen at the highest levels and then just stop. I think you'll see it move down into the retail market. It's interesting because on just about everything but American products, premiums are as low as I've ever seen them. The American products, they seem to be going higher and higher. But you will find, I think, that what is a easy to get, flush, supplied, laden market in retail very quickly will change. Not there yet, but I think it will, based upon what we're seeing around the globe. The retail public is just more or less asleep, and that's the truth of it. So, yeah, I think there's great values everywhere. Maybe the best value I've ever seen in my career is pre-65 silver, ever. But short of that, anything that you're buying right now in this environment, when the smartest money in the world is doing the same thing, is all you need to know. That's where the value is. The people who are doing this, the central banks, the commercial banks, the sovereign wealth funds, and some massive traders here in the U.S. who this is what really pisses me off. Nobody in the mainstream media has asked the question, who's doing this? Or even alerting the public that billions upon billions upon billions upon billions upon billions have come in since November of last year. For the last year, we see these kinds of inflows where literally millions and millions of ounces of gold and silver are standing for delivery every month in New York. Why is no one asking who's doing this and what's behind it? Is that by design? I would argue probably is. But all you need to know is that I'm doing the research for you all so you can see it to be true. And when you see people at that level, they're the most well-informed traders in the world. They know what's coming. They don't do it for the hell of it. That's all you need to know, period. And here we are this month again, massive record deliveries. No one's asking. This is not a market that it's reaching its limit or ending. When the most sophisticated traders in North America, a la the commercial banks, are going long and standing for delivery, who are being backed by someone big enough to where not even the media will talk about it? Is it the wink, wink, nod, nod Treasury Department? Is it the Exchange Stabilization Fund? How about Bo Hines? Bo Hines, the CEO of USA Tether, who was Trump's crypto czar, and Tether has $14 billion in gold, and buying gold with all of their excess reserves that they're getting through the issuance of stablecoins backed by treasuries, and the interest on those treasuries isn't transferable. Gold and silver are becoming far more valuable than the currency that stands behind it or that is used to purchase it. And I think that's all you need to know. So anything you're buying right now to get you out of the dollar into the trade that the biggest money in the world is doing, there's your value.
Wanted to give you a chance quickly, because we got to wrap, is to hit people with our current specials. It looks like we do have the couple of American products up there and some others as well.
1 ounce gold eagles at 145 over spot per ounce. that's a decent price, and I think it's only going to get tougher to find those kinds of prices. I would like it if it were a little lower, but at 145, it's only up a few bucks from where it was the last few weeks. Still a hell of a deal, because now that I think about it, the mint cost for the primary distributors is roughly 3.4%. So you're getting that at right around or just under mint cost for brand new 2025s or 2026s. What's the second one? 40% silver Kennedy halves?
40% silver Kennedy halves. I've not seen those ever on a special before. 185 below spot per ounce.
In 64, they made the Kennedy half. That was 90%. From 65 to 69, they were 40%. And, getting it at almost $2 under its melt value, under spot, is amazing. So that's why I was saying, I mean, I've never seen that before, ever seen that before. So, it's a good deal. Let's see, 10-ounce silver Nordic Mint bars, $3.49 per ounce. The Nordic Mint are brand new bars that we design and make, and it's about ounces that matter. I will say this, that premiums on bars are higher than they normally are, and have been all year, and that's because of tariff threats. The majority of the bars come from outside the United States, whether it be the Royal Canadian Mint or Pamp Swiss or Perth Mint, Valcambi. All of these refiners, there's only a couple. I mean, really, in essence, all of the bar manufacturers in the United States, the only one that I think is mainstream is Asahi. Now, it's a Japanese company, but they manufacture in Utah. Everything else is, for the most part, if it's not a third-party, a smaller private refinery mint, everything else from nation states, of course, comes outside the United States, from outside the United States, and the tariff threats made it so no one brought any in. So premiums on them are higher. Honestly, I like the junk silver better, but you want bars, this is a good choice. And 100-gram silver Valcambi Combi bar, the 1-gram Combi bar, that's silver. So they're expensive, but they're very cool. Think of a Hershey bar where you can snap off little squares. That's what these are. So it's a 100-gram bar. Each snap is a gram of silver. So it's intriguing. It's interesting. They're very cool. They make they're very cool conversation pieces. I like it from a standpoint of functionality and utility. Look, anything right now, it's just important to get out of the way of the dollar. And the dollar is, even the mainstream's calling it the debasement trade. Don't save in dollars. You're going to go broke. And they mask how easy it is to determine that, because we're told the dollar's only down 8% against the dollar index, a basket of crappy currencies. Measured against silver, it's down about 99%. And so when you talk about what is the better barometer, gold and silver are the barometers. Gold might be the best barometer, where the dollar's down 70+%, 75% against gold. Measuring against a basket of currencies, think of Triffin's dilemma, where every currency has to buy dollars in order to transact global business, at least for now, oil and whatnot. So all of these currencies sell their currency to buy ours, makes ours stronger in relation to theirs. That's why manufacturing flows to other countries. But same thing is true when you're measuring the value of the dollar against a basket of currencies that devalue their currency against ours. It's a stupid measuring stick. Measured against gold and silver, and you see the truth that saving in dollars is a sucker's game. So whatever you're doing, you're not doing it to become wealthy. You're doing it because it is wealth. Now, Dunning and I could talk to you for the next hour if you wanted, but I know it's time to go because I got a lot we didn't even cover. I'll save it for next time, but I hope you have a great rest of your day today, and everyone out there, I hope your week and your day and your week is a good one, and we're getting close to the holidays. I think I'm taking the last 2 weeks off. I need to recharge. I'm telling everyone now, I'm sorry, don't get mad at me, but I must recharge or I will lose my mind. So I think I'll see you next week. And then after that, it's up in the air. We'll see how much you twist my arm. But in the meantime, all the best, my man. Thank you as always. And I look forward to picking up where we left off next Monday.
And just a reminder that I will be traveling, God willing, next Monday when we normally record this. So it'll be my son Kaiser with you here on the Weekly Market Update next Sunday and next Monday, excuse me. So everyone can look forward to that.
Not Elijah, Kaiser. That'll be fun. I haven't talked with him in a while. I look forward to seeing him.
Yeah, right. He used to participate in our Mugs and Medals that Miles Franklin sponsored. He's also been part of our Ask the Broker series we do here on Liberty and Finance. He'll be with you next Monday. And on behalf of myself, all of our viewers, all of our subscribers, we just passed 125,000 this last month. Grateful for your presence here, as always, on Liberty and Finance.
Wow, congratulations. That's incredible. We're at about 90,000, so we're running after you.
You guys are on quite a trajectory. That's awesome. We're cheering you on.
We're running after you, but you're a good role model to chase, so you're the torchbearer. Anyways, Dunnigan, my friend, all the best to you, buddy. We'll see you next week.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for December 8th through December 15th, 2025, while supplies last. First this week, 10-ounce silver Nordic Mint bars are just $3.49 over spot per ounce. 40% silver Kennedy half dollars are $1.85 below spot per ounce. 100 grams silver Valcambi combi bars are just $275 per bar out the door. And 1 ounce US Gold Eagles are just $145 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.